Video, we are talking about the trend of the market or following the trend of the market. If the market is trending up, you do not want to go against the trend. That's one of the things that I had to really learn the hard way is to not trade against the trend. So in the market there are uptrends, and where that just means that the stock is moving up, and it never goes always, let me say, it never goes in a straight up motion. It's more like a zigzag, as you see in the picture here. It's more of a zigzag, up and down, up and down. That is an uptrend. Why? Because it is making higher highs and higher lows. You see the higher highs here, and you see the higher lows here. So this is an uptrend. If I was trading anything, I would first identify my trend, which this would be an uptrend. And if I was buying shares, I will buy it low and sell it high. Have you ever heard the buy low and sell high? If I was trading options, I would try to find my entry down, and know you want to enter down here once you have clear signal, let's say that. And I would want to pay attention to following the chart or following the move up, and I'm going to ride that move up. So yeah, you have got to learn to make sure you can identify what trend, what is the market doing, what is the stock doing that I'm trading, and making sure that you're on the right side of that trade by one, identifying the trend of that trade or the trend of that stock at the time. So the other one is a downtrend. And the downtrend is really kind of like the uptrend, it's just opposite. You're making higher lows or lower highs. I always get that a little bit twisted sometimes. You're making lower lows. Let's say that. You're making lower lows. See how we go from the high down to the low. So you're actually making lower highs each time you go down. So if I am trading an option, then I clearly do not want to be trading to the upside if my trend is showing me that this stock is trading to the downside. So we've got to be very careful with that, because you don't want to go against the market, because you're going to lose majority of the time. Now, if you're going to go in for a quick scalp, that's okay. Get in, get out, make your money, get out. But if the overall stock is trending up, then you definitely need to go with the flow. Let's say that, go with the flow. If the overall market or the overall stock is trending down, you want to go with the flow. And okay, there's another position that I call it sideways movement. Some people will call it consolidation. Either way it goes, you're just moving from side to side. You may make some type of high, but you're going to come back down. It's like trading in a zone. You're going to come back up to this resistance, and you're going to come back to this support. You're going to go back up to this resistance, and you're going to come back to this support. You're not making higher highs as here. You're not making higher highs, nor are you making lower lows. It did not drop down further. If you were trading options, I definitely would not want to be trading during this time here, because if you're trading like the SPY, which has 0-day expiration, which your time is your money will be evaporated really quick because of this sideways movement. So you got to be very careful with that. So we talked about the uptrend, the downtrend, and the consolidation or the sideways movement. So again, we've got to learn to identify the trend. So this is an example of an uptrend. An uptrend has higher highs, as we talked about. This is how it would look close up with if you were actually trading the stock or looking at the candlesticks. They're making higher highs, and the arrows are showing you here where it's making the high points, and down at the bottom is showing you where the lower points are making higher lows. Higher lows here, higher highs here. You want to be able, this would be in a good option play. If your stock was doing this and you were actually in the position, that would be a good profitable trade for you. You are following the trend, and you're making higher highs and higher lows. You do not want to go against the trend. I need to say that again. You do not want to go against the trend. So here's an example of a downtrend, and I do apologize that these candlesticks are a little bit not clear. Okay, this is a downtrend. How do we know? Because we are making lower lows. That means we are going down. This is a channel of going down. Here's an example of our downtrend here. We're making lower highs. Lower highs. That's exactly what we're doing here. Lower high. Lower high. This here is a lower low. Lower low. And it's going down. So we've got to, if you are in a trade and your stock is doing this, you do not want to be trading to the upside because the trend is to the downside. You want to follow the flow and go with the trend. You got to remember that over and over. Go with the flow and follow the trend. Here is an example of Walmart on Friday. Recently, Walmart was going sideways, which is it was consolidating or again going sideways here. And then all of a sudden Walmart had a downtrend, and that just means it's making lower lows, and it did. It went from sideways to something happened and it just dropped. It had a big drop. It actually went from 159 to 151. That's a big drop. So if you were in, say for instance, you were watching Walmart and you were about to enter this trade, if you would have entered here at the 159 range and you did an option put, that means you believe the stock is going to go down, you would have made a nice profit. Just that's like a $8 drop in the option. That's really good. So again, if you were in Walmart and the stock dropped this much, and if you were in an option saying that you thought it was going to go up to the upside, or you were going to do a call, then you would have been on the wrong side of the trade and you would have lost a lot of money because it clearly fell down into a downtrend. So again, you want to be careful and pay attention to what your stock is doing at that time and be able to identify your trend. So this is an example of the consolidation or the sideways, moving sideways. Is here, it's not really going anywhere. It's just here the stock trended up and then it just went sideways, and that you're going to see that a lot. You will see that a lot. You would have it could be up or down, and then there's a consolidation or a sideways movement. And consolidation occurs after a trend where price moves sideways. The price moves sideways between support and resistance, and that's exactly what it's doing in this demonstration here. This is your resistance, this is your support, and we'll talk about support and resistance a little bit later. So it says consolidation ends when the price breaks through the support or the resistance. So if this stock was to break through this area here and continue down, that means it has broken through support. So it has broken out of that consolidation phase, and it is giving you an indication that the trend is now broken and it decided to go to the downside. If it were hit here or it broke out above this resistance line, that means it consolidated for a while, and then it continued up to the upside because it went up, consolidated, and it could have very well continued to the upside. However, you want to have a clear indication as to what the stock wants to do, especially if you are in an option trade. This right here will cause you to lose money every time because it doesn't have a clear direction. And I always say, okay, what's the direction? What's the trend? Which direction am I going with this trade? And I need to make sure that I'm on the right side of the trade. And here it says consolidation occurs due to traders closing trades and taking profits. So what happened here is the stock moved up. They rode the wave. They followed the trend up. It consolidated here. It did not make its mind up as to where if it was going up or down. So the next move is you will wait on it to break through this line or this line or this area, and you would decide if you're going to enter the trade again to the downside or to the upside. And honestly, this right here is one of those thinking places. Okay, let me go back and regroup and figure out where I'm going to enter this trade again. If that's your desire, if your plan is to get back in it again, it needs to give you a clear indication as to which direction, so that you are following the trend, you are going with the flow, you are trading in the direction as with everyone else, right? Okay, so here is an example of Tesla, and just by looking at this chart, are you able to identify an uptrend, a downtrend, or a consolidation? And when I just say, let's say a up movement, a down movement, and possibly a consolidation. Let's say that. So just by looking at it visually, and then we're going to go and I'll give you a few minutes, maybe a minute or so, to look at that. We're looking for an upward movement, a downward movement, and a sideways or consolidation movement. Yeah. So here is the chart. In this chart here, we see where Tesla actually came down here, came down here. It had a slight incline, so that could have been a scalp. We could have entered somewhere around here and got out here. That could have been an upward movement to get in as a scalp. I am a scalper. So, and scalping just simply means you go in and out for smaller profits equals big gains for me. So here would be more of a consolidation or a sideways type movement, or you're not really going, you're still staying within that support and resistance sideways type thing. That would be your consolidation. Here, Tesla broke out of that trend of consolidation. It broke out of consolidation phase here, and you could have entered again to the upside for another scalp because it start moving up, an upward movement. So here we are. We have the down, we have the slight up, we have a consolidation or a sideways, and then we have another upward movement for Tesla. And look, by looking at this chart, there are 1, 2, 3, 4, at least 4 or 5 here, because you could have traded it down here. So there was 4 or 5 ways that you could have gone in and made money, being able to identify the flow of the market or the trend of the market or the trend of that stock, not really the market, the trend of that stock at that time. And always say, trade what you see. Trade what you see. Right here, the market was, I keep saying the market. At this point, Tesla is going down. So I would have been looking at the downside of Tesla, which is a put in the option world. And here it shows that it reversed. So I could have gotten in for a quick scalp to the upside, which is here. Then I would have waited. I would not have traded this area here. When it broke past this place, which is the high of this candle, I would have entered a call back to the upside, and I would have just stayed in, and I could have made money 1, 2, again, 5 times. Yeah. So I hope this is very, very helpful for you, learning to go with the flow of the market, and you can get an overall sense of what the market is doing overall by looking at this, the SPY, the VIX. And there's so many other things that you can look at, and we'll talk about that a little bit later. But learn, if nothing else, just start following your charts. Start looking at your charts and see if you can identify the trend. What direction should I be trading in? What direction is this stock going? And go with the flow. And yeah, so if nothing else, remember this: go with the flow. Y'all, I am super, super excited. Thank you so much. Thank you for listening, for watching, and yeah, I look forward to learning and growing with you. Have an awesome day today.